All right, guys, how's everyone doing? Good morning. Hope everyone is having a great weekend. Sunday morning here, real early. I want to do things a little different to get some people in who can't attend these on the weekdays. So today we're going to go over earnings breakouts and breakdowns for the second quarter. So I've talked about earnings breakouts and breakdowns with you guys quite a bit. If you haven't already, go into the blog and there are a ton of posts on earnings breakouts. You can see past trades I've taken, that we've taken. So take a look at those. We're not going to go into the process of how these breakouts and breakdowns work, but even if you haven't had a good introduction to them, you'll figure it out as we go through it. So what we're going to do today is go through this second quarter. We're going to take the stocks that have broke out, take some stocks that have broke down, and analyze them and see how we can trade them going forward. So when these things break out as swing traders, we usually are not trading them on the first day. Unlike day trader, a day trader is going to trade them on the first day, second day, third day as they're moving. For us, we need a signal that the next momentum phase is going to run, because there's already been a big move on that first day. Now we have to wait for signals that we get that next big move. So sometimes the stock might not break out, or might break out, and we might not trade it for another 3-4 days, maybe 3-4 weeks. So we're going to watch these patterns set up. So that's what we're doing here. I picked stocks that have broke out really nicely or broke down for us nicely. And then are they setting up for that trade that we can profit from very quickly? And when I say very quickly, hold times are usually going to be a couple of days to a couple of weeks, maybe at the most 2 months. So that's what we're looking at as swing traders, trying to capture these moves. So we're going to get into that. We'll wait a couple of minutes for everyone to come in. Just to let me know if you guys you guys can hear me, you guys can see me okay. Let me know in the chat here. Funny, Glenn. All right. Yeah, so we're doing this from the Bulls on Wall Street, the Bulls on Wall Street YouTube live. Obviously, I'm not Kunal. I should have given you a better introduction to that. I'm Paul Singh. I run the swing trade service. No, Kunal has not had plastic surgery. I run the swing trade service at Bulls on Wall Street. I mentored Kunal way back when, in the mid-2000s, before he started Bulls on Wall Street. In swing trading, and a lot of the stuff that we went over, he transferred over to day trading. So I always say with day trading and swing trading, about 70% of it is actually very similar or the same, a lot of same concepts. And obviously there's that 20 or 30% that's specific to what you're doing. But a lot of the same concepts apply. So yeah, this is not Kunal here. Kunal did not have plastic surgery, but okay, everything looks good. Let's get into it. Let's talk earnings. I'm going to go ahead and share my screen here, so you're not going to see much of my face anymore. You should be seeing my screen and some of the stocks here we're going to look at. So earnings breakouts. We're in the second quarter. We're more than halfway through here. A lot of the big names have already reported, so a lot of the exciting part of earnings season is over. And if you guys have any questions, go ahead and shoot them in the chat here, and we'll get to them as we go through. But most of the big names have already reported. The FANG stocks have reported. Facebook, Amazon, Netflix, Google, Apple has reported. Tesla has reported. Twitter has reported. A bunch of stocks here have reported. We have a number of retail stocks still report, and a lot of times stocks report in groups. So we've had a lot of the retail stocks report. And guys, let me know if you can see my charts here. Are my charts in this document up? So I'll be flipping back between this chart and this document. So these are some drawings here, and this document here. So go ahead and shoot me a message just to let me know that you can see the charts. So a lot of the big guys have reported. We have some still coming up. I'd say there's about 2 more weeks of reporting here where we'll get some good earnings breakout tradings, and it will die down, take about a month and a half, and then pretty soon the next earnings season, quarter 3, will be starting up again. So throughout the year, we really have about half the year. They report once every quarter. And they usually they're clustered in this month and a half. Great, looks like you guys can see. Okay, good. So basically 5 to 6 months of the year, we're kind of in earnings season. So we get a lot of these earnings breakouts and breakdowns to trade. The nice thing is, when you're trading these, you don't have to be, as a swing trader, you really need to know what's going on in the market, what's going on in the sectors before you really get to the stocks you trade. Earnings have their own PR news. They have their own catalysts to where you don't have to worry about all that. So especially you guys who are day traders, you can really get into the earnings and not have to worry about all the other swing trading stuff. So if your focus is day trading but you want to do some swings, this is a good way to do it. And then if you are a swing trader, one, it's just profitable, these setups. Two, sometimes you can get out of what's going on in the market. Maybe it's not a great market to be trading and you need to kind of take a step back and not be taking so many trades, which good swing traders, they know when to be really aggressive and when to be conservative. But you can take these earnings breakouts because they're moving on their own. So these are a couple of nice things about trading earnings. And also, they have their own catalysts, so they're going to move. So that's why we like to trade these things. Now, there are a couple of things I do. Most people focus on the breakouts, stocks with good news, breaking out. They're about to start a trend to the upside. I actually, I trade breakouts, and for many years I traded breakouts almost exclusively during earnings season. Now I trade the breakdowns just as much or more. So pay attention to the stocks that get beaten down as well. And oftentimes they will make big moves, and common sense dictates that these things have bad news, they're gapping down, they're starting a trend to the downside, that we should be shorting these things. But actually, I like to look for the long setup because the long setups tend to do really well on these earnings breakdowns. Earnings breakdowns tend to be overreactions to the news, and oftentimes you get these big reversals in them. So both for swing trading and actually for day trading too, I look for the reversals intraday to trade as well. But we're focused on swing trading right now. So that's how we're going to handle the breakdown stocks. So we're going to go over the breakouts, some of the breakouts. There have been a ton of them. We're going to go over about 10 or 15 of them here. Then we're going to take a look at upcoming earnings plays this week. So the stocks are reporting this week and what we're going to be looking for. And then we're going to talk about overall trends and how these earnings plays impact the market. So it's not just the trades we take. We can get some market clues from what's going on during earnings season. So we'll talk about that. And then we'll go through and take some questions that you guys might have. So let's just pull up these stocks, and as we go through, I'll explain them. So if you don't know how to trade these things, we're going to go over how to trade these specific stocks. So first up, let's start with one of our most recent earnings plays, and that is Tesla. And to let you guys know, I am actually in Tesla right now. So I entered towards the end of the day at 346. Stock's at 348 now. I'm going for a move to the top of the range here. Maybe 370, maybe even the all-time high here at 390. Now, why am I doing that? Tesla is a low float stock, which is surprising because we all trade it. It's trading at $350. It's a popular company. You think of it as one of these bigger stocks, but actually, float size is only 117 million. To give you a comparison, Apple's is 5.1 billion with a B. So now the reason we like the low floats is they tend to move more, and you can even see with Tesla, just look in the last 4 months how volatile it's been. It's traded in a 100-point range, even more than that. At one point, it was close to 150 points. So very volatile. As swing traders, we like volatility. So obviously, Tesla is always on our radar. We want to catch some of these moves in here. And now we've got a catalyst. You can see all the volume coming in on a low float stock. That means the stock can be pushed. So we like that. Tesla is heavily shorted. And when shorts start to cover, when they get scared and they get out of the stock, they're creating demand, and you get these short squeezes. So these are a couple of reasons we like Tesla right now and why I'm willing to get in very early. Now, most of what you're going to see today is stocks that have broke out, and now we're waiting for a pattern. With Tesla, I didn't do that. I just jumped in because of the factors I talked about. There's a few other things as well, but those are the main two things. And now we're going to see if it's going to run. So if you're in early, like me, that's great. Low risk, we can risk 8 to 10 points, but there's a potential for a 30 or 40 point move. So that's the idea here with Tesla. Now, if you're not in it at this point, what I would do is probably hold off now. It consolidated a little bit on Friday. We'll see if there's some more consolidation coming in here. And I would look for one of two things. If it breaks 350, which is going to be the top of the breakout day candle, you could get in at that point. And that's a show of strength. It'll look like it's ready to run. If it does pull back, be patient, wait for the pullback. And when you start to see some strength in the stock and it looks like the pullback is over, then jump in. So I probably wouldn't jump in right in here, even though I'm already in it. I would wait now if you're not in it to see what happens. So that's what we're looking at with Tesla, whether you're in it yet or not in it. Number 2 breakout stock is GRUB, and I am in this one as well, Bulls on Wall Street. Members got an alert, so if you're already a member, you know how we do this. If you're not, you can go to bullsonwallstreet.com. Kunal runs the day trading and the boot camp, and I guest in the boot camp as well. But I run the swing trade service. So I put a video out every day, focus list of the stocks we're looking at, how we're looking to trade them, and then you get an alert if we decide to take the trade. With GRUB here, you can see, and I messed this thing up here. Let me pull it back. So you can see here, big breakout. Obviously, this is the day it reported earnings. Heavy volume, the type of stock we're looking at, low float, so we know it can move, and you can see the price action here. This thing in the past few months has run from 83 all the way to 140 and now has pulled back. So we liked this. This is a standard classic pullback play. And let me show you one of my ugly little drawings here. Let's say this is the breakout here, 5% or higher. With GRUB, it was higher than 5%. Standard pullback play where the stock starts to pull back, and then at some kind of support level, we look for the bounce. And then we're looking for the move. And that's exactly what GRUB is starting to do now. I entered here on Thursday. Could have entered on Wednesday as it showed strength right here at the moving average. Decided to wait for a little bit of confirmation. We got that. Consolidated on Friday. We're in this one. Very low risk. We can put our stop here, just 3 or 4 points. And then we've got a lot of room here to the top of the range at 140. So essentially here we're risking 3 or 4 points, and risk is very important, to gain about 14 points. So let's think about that. That means we are potentially making $14 for every $3 or $4 we risk. That's the way we want to be trading. And then $3 for $14, that's a pretty good trade. So if I'm even break even on this setup, if I trade this setup 100 times, I'm only gonna, on 50 trades, I'm only gonna lose $3 or $4, and on the 50 wins, I'm gonna win $12 to $14. So you can see how much money you can be making trading this kind of setup with this kind of risk reward. It doesn't take, you don't have to have an 80% win rate. I could have a 40% win rate and still be very profitable on this type of setup. And that's my style of trading. I'm looking for setups where I can get these big risk rewards, and I'm not relying on a win rate, because as a trader, it's very hard to have a high win rate. Very few people can get 70, 80% win rates. If we can be anywhere between 40% and 55 to 60%, but have these big risk rewards, that's how we're going to be very successful, and how it's going to be easy to do what we're doing. So that's GRUB, the two breakout stocks that I'm in right now. Now let's talk about GTLS, CLF, and of course Google. So let's start with GTLS, another low floater that has potential to move. Has already made, you can see this looks a lot like GRUB. This is basically the exact, if you entered here, this is the exact setup I traded in GRUB. We had the breakout, we had the pullback, and then we had the show of strength. Very low float stock, only 22 million. And you can see how it moves. Again, over the past 6-7 months, this thing has gone over 100%. So this is the type of stock we want to be trading. And now this was a nice trade if you took it here. I didn't take this one, but let's just talk about it. Let's say you entered at 75 and you put your stop under this range and basically risked $1.25. Top of the range is 80, so that's 5 points that you're looking for. So again here, you're risking $1.5 to make $5. That's exactly the way you want to be trading. Now it did pull back on Friday, but it's holding this support level, and I think it eventually will hit 80 here. You could have even taken off at 78.50 and you still got 2-to-1. So it's already been a profitable trade, and maybe it'll be even more profitable. Now, obviously that's if you took the trade, and I'm showing you a setup you could trade. Now, what are you looking for if you're not in it now? I would look for a break of this range right here. Now we do have this wick here, and maybe you wait till 80, but I think it'd be safe to take around 78.70, we'll say. So if it pops here this week, breaks 78.70, I think you have a good setup, basically a break of the high range, and that could set up the next big run. You can see the last time it broke the high range was here, and it made a run from 62 to 73. So that's what we're looking at here with GTLS. Now let's look at CLF. Now, CLF, I actually did short this on about a week and a half ago. So you see you had the big earnings breakout, continuation, then we had this reversal candle here. If you shorted it up here, it was actually very profitable. I shorted it around 10.95. It did go all the way down to 10.20, and I could have taken profits there, but I thought it would break and give us a bigger move. It did not. When it pulled back up here, I got out at about 10.70. So it was a small win. But now it's consolidated in here. It's shown some strength at the 9, and I think it is a good long setup now. And what I would look for here probably is I would wait. You could have entered on Friday on this candle, but if it breaks 11, you got that round number break. You're breaking this range in here. Now there is a little bit of upside resistance right in here, but I think a move above 11 would be a good setup. And I'm not, even though I did short it initially, I'm not afraid to reverse course and go long. So I will look to play this on a break of 11. Okay, Sherman here saying that it's been the charts have been getting blurry. If others of you are having that problem, let me know. It might be an internet issue, and I can't really do anything about that. All right, so that's CLF. Now let's talk about Google, one of the stocks that everybody is watching. So, and one of the few big tech stocks that actually broke out on earnings. It's been a pretty bad earnings season. So for big tech stocks, not for all stocks, as we could see already. So going into earnings, you can see Google had kind of been beaten down and had this big, long consolidation range from about 1,000 to 1,200. And before I even get into Google, let me mention something, especially to you guys with smaller accounts, and that is when okay, so it looks like some of you are saying it's fine, some of you have had it blurry. I'm going to get out of the sharing and we'll get back in and see if that helps. But let me talk about Google. So it was trading at 1,000. It's at 1,200 right now. So I know a lot of you guys, especially with smaller accounts, say you're trading a $5,000 account, $10,000 account, even people with $25,000 accounts, you might be hesitant to trade something that's at 1,000 or 1,200. And that's actually a mistake. And I know you guys want to trade some of the smaller stocks because it just feels like you can load up on shares and then you think to yourself, wow, if this thing makes just a $2 or $3 move, I can make a lot of money. The thing is, those smaller stocks, it's difficult for them to make $2 or $3 moves because that can be 50% of the stock's move. So if you're trading a $5 stock, for it to move 2 points, that's almost 50%. So those smaller stocks aren't always going to make those kind of moves. So what you need to focus on is not the price of the stock, it's what kind of percentage gain can that stock make. So with Google, You know, it was trading at 1,000 and it's moved to 1,200. So it's made a 20% move already. So that's what you need to be focused on. Can this stock move 20, 30, 40, 50%? You know, if you were trading Google, and I'll pull up the chart in a second, but let's just say a long-term hold. You know, in 2016, this thing was trading at around 700, maybe even lower than that. So, you know, it's made almost 100% move, and you would have doubled your money. So the focus should not be on, okay, this is 1,000 shares, $1,000, I can only buy 10 shares of it. You should be saying to yourself, can this move 100 points? Because then that 10 shares turns into $100, which if you have a $5,000 account, $100 is a nice gain. So that's what you need to be focused on, not the price of the stock. And I'm going to get back in to the screen share now. Hopefully that fixes any issues with distortion. All right. Okay, guys. So let's talk about Google. Don't, just because you might have a smaller account, don't take it off your watch list. You know, this thing could go from 1,200 to 1,500. And then, you know, if you had 10 shares, you just made $300. You know, if you could do 500 shares, that would be $1,500. So it just depends on the percentage move, the volatility. Focus on volatility. So anyway, getting back to it here. Nice breakout. Was a little shaky for a few days here, and this was happening throughout big tech. And you know, when one of your stocks does this, pay attention to the reason it's doing it. When I say the reason, I don't mean the news. What I mean is what's happening in the market. Is this just market related, or is it your stock related? And if we pull with Google, we want to be paying attention to the NASDAQ. So if we look at the Qs did the exact same thing. Okay, so someone said if you change the image quality in your settings, that will help. Okay, so you can see here the NASDAQ did this as well. So there was no problem with Google. This move here was really market related. So we know there's not an issue with Google. There's no bad news coming in, you know, saying, you know, something negative about the earnings. This was basically market related, and now it's starting to show some strength. So we have the breakout pullback we're looking for. So I'm not in Google right now as a swing. I am in long term, but as a swing, I'm not in it just because I have my money in other places. But I think we have an entry here. So we had a show of strength. We can place our stop right under the range. So let's look at how we're going to play this. Joe, this is TC2000 that we're using here. So I can risk about 20, 25 points here if I place my stop under the range. We've had a show of strength. We're above the moving average. And if we have a target here at the top of the range at about 1290, that's giving us about 60 points, 62 points. So let's say 60 points. So we're basically risking 20 to make 60. Again, that's exactly what we're looking for. For every $20 we would lose on this, we can make 60. So always think in terms of, okay, if I have a 50% win rate, how much money can I be making? And here, you're going to lose on 50 trades, $20. You're going to win on 50 trades, $60. $40 difference. That's huge. So really nice setup right now in Google. If on Monday when we have the market open, it holds these levels, I think we have a good setup there with Google. All right. So these are some of the breakout stocks. Now, you can see here my list here. These are all the different lists I keep. These are the breakout lists. So this earnings season, I've got 24 stocks right now, and really I haven't added a lot of Wednesday, Thursday, and Friday stocks. So I probably will have about 30 to 35 breakouts so far that I'm interested in. And you guys can take a look here. Actually, you know what I'm going to do? I'm going to copy this. And so I'm going to copy the symbols here, and I'm going to see if I can put them in the chat. So look under Bulls on Wall Street in the chat. Okay, they're not separated, but you have the tickers here. You're going to have to, oh, there we go. It did. Okay, so you guys go ahead and look in the chat box here, and I have some breakouts for you. You can start your watch list on the breakouts if you haven't already. Just paste that into whatever charting platform you're using. You can go into FinViz here and just paste them in here. and hit the button here, and you have all the breakouts, and you can go in, look at the charts. You know, you can transfer them to your charting platform, but really quickly here, you can look in FinViz. It's free, and you can see all the stocks, and then you click on it, you get more information. Like say we were interested in CDMO, you can look here and you got all the information here. What I like to do as well is go into ownership. And when we go into ownership, you can get some numbers here. You can get, what's important to us is float size. You can see the short interest, how heavily the stock is shorted. That's some good information here. And are these the breakout? Did I give you guys the breakouts or breakdowns? Okay, these are the breakouts. And let me just show you guys what I was talking about with, I don't have Tesla in it yet, but you would see the float size, the short interest in Tesla and why I liked it so much. Okay, all right, guys. So that's the breakouts. Now let's look at the breakdowns. So this is the breakouts here. This is a breakdown. So basically 5% or more, and this would be 5% or going down, but 5% or bigger. So here we're looking for stocks that have broke down, and whereas here we were looking for strength, here we're actually looking for a stock that is going to reverse either like this or like that. So we are looking at, now I will short these, but today we're just going to focus on the long setups. Part of it is because the market is so strong right now. So I think we have an advantage to going to the long side. So even though you're seeing me focus on longs, I am not long biased. I love shorting. I short a lot. But right now, it's probably not the best time to look for shorts in these things. So let's look at some of these breakdown stocks. And one of the things you're going to notice here is I've got more breakdowns and breakouts on my list. And if you go through my watch list as well, you can see I've got 24 breakouts this quarter that I like. And it's probably a little bigger, probably around 30. And if you look at my breakdowns, well, I've got 25 listed here. In my journal, I've got a bunch more that I haven't put in here yet. And actually, let me copy this for you guys as well. All right, I'm going to put the breakdowns in the chat as well. So now you guys have, there we go. All right, so now you guys have a bunch of breakouts and a bunch of breakdowns to start scanning, to start analyzing and looking for trades. There are some more that I've missed here that I haven't put in, but this gives you a good starting point. But I actually do, if you factor in what I have in my, I keep a journal next to me as well. I do have more breakdowns this quarter than breakouts. And that indicates to us, and we'll talk about this in a second here, but that indicates a little bit of weakness in the market, especially in some certain areas. And we need to pay attention to that. So I use these as market clues as well. But let's go through some of these breakdowns. I'm going to go through the breakdowns really quickly because we're really looking for the same things. I'm just looking for indications that these things could reverse. Twitter broke down, and Twitter had been a really strong stock. I like strong stocks that break down because they tend to come back. I mean, look what Twitter did last time it broke down. It made its big run. And you see this a lot. You see the next big run after a stock had some major weakness. We saw that with Twitter, and then it made that run from 26 all the way to almost 50. So almost 100% gain, maybe 80% gain here. And we're going to watch for signals for that again. We don't really have it right now. It's kind of bouncing off the 200-day moving average. But if it really starts to show some strength here, I would look to get into Twitter. And you can see what I'm talking about is not as precise with the breakdowns as it was with the breakouts. And sometimes these signals on the breakdowns are more subjective and not quite as precise. But you're looking for just I would say shows of strength or starts of a reversal play. Facebook, really interesting here. This is the when it dropped from 215 down to 180. This was historically either the most or one of the biggest drops in the history of stocks. And I don't mean percentage gain down, but when you factor in its market cap, it was the biggest market cap loss ever in the history of stocks. And I actually like that. Because that tells me there's a huge overreaction here. Last time last time it gapped down and continued big, it made a huge run from 150 to the all-time high here at 217. So it's interesting when these things get some adversity, that often sets them off for big runs. So we're going to watch for clues here on Facebook. For Facebook, I would wait, not any real technical pattern, just wait for a breakout of these moving averages. If you can remount these moving averages, I think we could get the next run, and again, it would be very low risk. So let's say we enter here at about 183. We could place, a 4-point stop, and then go for, there are a number of places where you could look to get out. 4-point stop, you could get out at the next moving average at 195. Now you're risking 4 points to gain 12. Again, so that's 3 to 1. Every dollar you risk, you're going to make $3. That's what you want to be doing. And I think you could even go for a bigger win here. So Facebook is setting up for a monster trade, and we'll see if it ends up happening. Netflix, very similar, and I am in Netflix right now. Report members were alerted. We entered Facebook right in here on this candle here. The show of strength after it had been beaten down. This was earnings breakdown. Continued lower, continued lower. Then we got the show of strength right here, and it has bounced since. So I entered here at 336. The stock on Friday got up to 346. So I was already actually at about 2 to 1. And I could have taken profits here if I wanted to. But I think this could make a bigger run. So I'm looking for a monster trade, not just the standard 2 to 1, grind it out over time. I think we can get a big win with this one. So it's stalled here at the 9. I'm betting that it'll consolidate here a little more. And if it breaks that 9, breaks 350, this thing could really shoot up to maybe 375. And that ends up being a monster trade here. 336 to 375, that's about 40 points. And then if it were to break the this moving average here, the 50-day, I think that could set up a move to the all-time highs, and I would re-enter at that point. So that is the plan for Netflix. If you're not in right now, I probably would not get in here. I'd wait to see if it breaks 350. So put it on your watch list. Have 350 marked, alerted. If it breaks 350, I think you've got a good entry. So that's Netflix. Let's take a look now at Baidu. This is basically like one of the China Google, Facebook type stocks, big tech. And you can see here, big gap down as well. And since it gapped down, it's already moved up about 6 points. And I think actually you have an entry here. So if your entry is here at 235, maybe you put a stop at the bottom of this candle, risk about 5 points. To get back to where it broke down from, you're looking at 12 points, so you've got 2 to 1. And if it were to move up here, you're going to get 3 to 1. So that's the play with Baidu. Now let's look at Pets, and I am in Pets right now. It's at 38. I got in at this candle on 36. This was the money play here when it showed strength right here. Now I don't think there's much for you to do here, so I added on this list just to show you how you can trade it, and I'm in it. Of course, Bulls members were alerted when I got in, but we're up about 2 points right now. I would say, I've probably got 2 to 1 already, but I'm going to go for a move to about 39 or 40. So, if it can get 39 or 40, I'll look to take profits. For entry here, it's already made its move, and you've only got another point or two that you can make. Maybe if you enter here and you use a tight stop of a point, you could still make 2 points and kind of load up on shares there. So that's Pets, Halliburton, oil stock. You can see here, again, not a lot to do with it right now. I think the trade has been made when it showed strength here. And maybe it can run to the top of the range. But a good example of what you can be doing. Whirlpool, another one. Now I'm showing you a bunch of already made the moves, but you can see how you could be trading them. Whirlpool was another one. And you're seeing a theme here that a lot of these things reverse. So this one you could have entered on the 3rd or 4th day. It's made a fantastic move. Let's say you entered at 127. You're already at 134. Maybe this thing runs and you could enter here on the break of the 9 and see, use a tight stop. Don't risk in terms of points. Don't risk too much. Maybe risk 2 points. So if normally you're willing to lose $500, you could get 200 shares and see if it runs some more. Win and Cake. Two places that I love, actually. I love staying at Win when I'm in Vegas. But gap down, and this thing tends to gap down quite a bit, and whenever it does, it leads to another big move. So watch for a reversal signal there. And then Cheesecake Factory, I would wait for a break of the moving average. So I don't care about any patterns, just a break of 50, a break of the moving average could set it up for a run to 55. So that's what we're looking at there. So there's some stocks to watch here. I've given you 5 breakouts and I think 7 or 8 breakdowns. So you've got about 13 or 14 stocks there to watch. And then if you're joining me late, go back through the chat. I posted about 50 stocks, 24 breakouts, 25 breakdowns. So you've got a lot of stocks to be watching now. So you guys are basically in the thick of earnings season. You've got all these stocks to be watching for specific earnings plays, and keep scanning for stocks that are breaking out. You can go into FinViz, very simple, go into their screener, and you can set earnings dates, performance, and set some volume measures here, and you can get a list of the stocks that have broke out on earnings. All right, guys. So those are the stocks. Upcoming, we've got Snapchat. Let's just go through a few of these real quick. Snapchat is reporting, I think it's on Monday, but all of these are this week. So, if we look at Snapchat, it's a recent IPO. So it IPO'd here. You can see where it IPO'd. It's broke out once on earnings. It's broke down once on earnings. I don't know if this was earnings, but broke down recently. I think if it breaks out, so watch for a breakout on Snapchat. If it breaks out over the 50-day 200-day moving average, I think this could set up for a really big run. And we know we've got a range here at 20, and we're all the way down to 12 right now. And we've got an IPO high range here of all the way to 30. So keep an eye out on Snapchat for good news. I think if it breaks out, we're going to get a money trade. So that's what I'm looking for Snapchat. And then remember, we look for the breakout, but then we look for a pattern to trade. Roku, another recent IPO. This one, breakout or breakdown, it'll be on my list. If it's kind of a dud and does nothing, wrong stock. Roku. So here, whether it breaks out, whether it breaks down, it's going to go on my list. If it just kind of fizzles out and does nothing, I won't care about it. But if it breaks out over 52, if it breaks down here, we would have a good breakout or breakdown setup. And then we've got Dropbox. So you can see a theme here. We're watching these recent IPOs that have been popular. And Dropbox made a big run. Now it's been beaten down. I would love it if it broke out. I think we'd get a money trade there because there's so much room to the upside. And I think that good earnings would get people into the stock. Then we've got some of the big guys here. Disney, a 1.5 billion float. Not the most volatile stock. So for you small account holders who are willing to trade, say, $100 stock, I would rather trade Google, even though it's $1,000 stock, than I would trade Disney. But if Disney does break out, it's going to be breaking out. I think this might be an all-time high. It's going to be breaking out to highs. So watch for a breakout of 116. I think that would get it on our radar. And let's go over a few more. Let's go to Twilio and Weight Watchers. Twilio is a very volatile stock, and if it breaks out, it could go over its IPO high, which would set up a huge run. So let's keep an eye out on that. And then Weight Watchers, same thing. If it breaks out here, it could break to all-time highs, and that would set up for a really nice run. So that's what we're looking to as we head into the new week. Now, let's talk about how we use earnings season to kind of gauge the market. Overall trends, financials, big tech, commodities. So let's start with financials here. Financials have been reporting good earnings. It's interesting because at the start of earnings season, we had a couple like Bank of America that did not do so well, but as and you can see what it was doing. But as earnings season has played out, a lot of the regional banks, the smaller banks, and even some of the bigger banks, I think Goldman Sachs, not Goldman Sachs, I'm forgetting which ones now. Try Wells Fargo. Yeah, Wells Fargo here. Reported good earnings, and we've seen a change in trend because of that. We were staying away from financials for a while. You can see how it had been trending down. But now I think earnings season has given us a clue that we want to pay attention to financials. So that's what I mean when we use earnings season as a market gauge. So we know a lot of banks have reported good earnings, and that could set up a big run in financial. So because of my analysis of earnings, I might take a shot at trading at financials ETF like FAS. I could enter here at 71 and use a tight stop about 2 or 3 points, or we could go for a run to 80. So that's what I mean by market gauge. Big tech, and we'll just use the Qs for that. It was actually pretty shaky. We were getting a lot of bad earnings. We know Facebook, Netflix did not report good earnings. What was interesting is Amazon had fantastic earnings. And what was interesting was, even though it had fantastic earnings, it didn't break out. And that was a bit of a concern. Now, last couple of days, maybe that reverses course, but we are watching big tech very closely for some of these signals. And commodities also have been doing good during earnings season. So a couple of areas to pay attention to because of what we've seen with specific stocks in earnings. All right, guys, so that's what I wanted to go over today. Now I'm going to open it up for a few of your questions here. They can be about what we talked about here, and if you want to talk about something else, go ahead. Let's see here. I'm going to go back to the chat here from the beginning and see if you guys have any questions. We had a really nice turnout here. You guys are really active. That's awesome. I love when you guys have a lot of questions and comments. Let's see here. Okay, Paul, let's see here. What is a high short interest that you look for? Basically, you can go into short interest numbers. I showed you that on FinViz already. Look for stocks that are being shorted heavily, because those stocks, if there's some good news, the shorts are going to get scared and they're going to get out of the stock. When they get out of the stock, you see these big moves. So pay attention to those short numbers. What do you think of PayPal? All right, insoluble. All right, 78. Let's see, PayPal, kind of in line with. Looks like I'm having a little bit of an issue pulling it up here, but not only in line with what we're talking about with financials. So PayPal is interesting because we can kind of think of it in two different respects. One as a financials stock, and also as a tech kind of stock. But related to financials specifically, and you can see TC2000 has it in the grouping of financials, very strong, actually showing relative strength to rest of financials. So I think if you want to be in a financial stock, you should either be in the leveraged ETF or PayPal. And PayPal is going to beat any of the banks. So if you see, like, compare it to Goldman Sachs, you can see Goldman Sachs was beaten down while PayPal has been very strong. So I do like PayPal a lot. All right, would you consider Baba similar to Twitter? I don't think, has Baba reported earnings yet? I'm not sure. I don't see any big breakouts or huge volume moves yet. So I would wait, unless you guys can tell me if you know, but I don't think Baba has reported yet. But we'll wait and see. If Baba breaks out or breaks down, it'll definitely be on my watch list. It is a stock I like to trade. I trade moving average pullbacks with gapper stocks and have faced 3 consecutive fake pullback moves. Is there any better filter? So this is Faraz. Faraz, good question. First of all, you are going to lose. You've been hearing me talk about 50% win rates. So you're going to lose on these 50% of the time. But what's great about these is the risk reward. If you lose 50% of the time, but you're making 2 to 1, 3 to 1, 4 to 1 on these, you're going to make a lot of money. So that's what you need to be focused on. And short term, even though we're trading, say, a 50-50 probability, it doesn't always play out like one trade to one trade. It's not like you're going to win one trade, lose one trade. You may win four or five trades in a row. That doesn't mean you're going to always win. you may lose, like you said, three trades in a row. Don't be focused on short-term results because you go through these drawdowns and kind of draw ups. But in terms of the actual setup, when I look for pullbacks, I don't just look for a move. A lot of people look for that pullback move and they just blindly enter. There are clues I look for. Some of the stuff we already talked about in terms of the numbers. If they have good numbers, I like it. And then you want to see evidence that it's holding that level. Don't just blindly get in because it's at that level. So I think your win rate will improve if you think about these things. All right, Jay, love the fact that you talked about small accounts. Yeah, and I think a lot of small account holders aren't thinking about the specifics they have to be doing. And I know this very well because even though I'm trading bigger accounts now, I started with small accounts. Those of you who know my background, you can go to the Chat with Traders interview. You can go to my website, Paul J. Singh, and I've written about it. My first two accounts were $5,000 accounts that I blew up. My first one was during the late 90s internet boom. So you can see I've been trading for a while. I started during the internet boom in the late 90s. I ran that $5,000 account to over 200,000 in like 2 or 3 months. That's how crazy that market was. I didn't know what I was doing. I just got lucky. And then the whole thing crashed and I lost that account. There's two ways to look at that. One is I lost 5,000 or I lost 200,000. But that was my first introduction to trading a small account. But I learned a lot about it because I built that account up. And one of the things you have to know is don't focus on low price stocks. You can trade them. There's nothing wrong with them, but your focus should be on volatility. So what is going to move is what you should be focused on. If that, some of you don't even want to trade $50 stocks, but if that $50 stock can move to 100, you're better off trading a $50 stock that can move to 100 than a $7 stock that's going to move to 9. So focus on percentage gain and volatility, not the size of the stock. Okay. So Jay, you don't need to use options. And the problem with options here, there's nothing wrong with options. Options are great, but you have to master what you're doing. And a lot of people get into options and really don't know what they're doing, because with options, there's first of all, there's many different option strategies, hedging strategies and all that stuff. I'm not talking about that. Just directional, playing for directional moves when you're trading options. The big component that you have to know is the time factor and time decay. So we don't care about that when we're trading the stocks directly. When you get into options, you have to be sure that not only do we have that setup, but that the stock is going to move very quickly, because obviously as time goes on, you're not going to make as much and you can even lose, even if the stock is higher than where you entered. So you really have to think about that when you're trading the options, and you still have to make sure you're managing your risk well. All right, let's see here. Linear is asking about NVIDIA. I don't think, NVIDIA is one of my favorite stocks to trade. And I have positions in it long-term as well. I like it as a long-term play, and I've liked it as a long-term play for a while. Short-term, you've got to wait for earnings, and I don't think it's reported yet. So anytime a stock is coming into earnings for swing trades, I get out of it. Obviously, long-term, you're going to hold. But for swing trades, wait for the earnings. Sherman, the moving average that I use, now I go back and forth, but 50-day moving average, 200-day moving average, and then the 9 EMA. Any recommendations for brokers on $10,000 account? I think with 10,000 you can open up interactive brokers, which is a good broker. All right, thanks for the kind words, Bim. So I think, Joe, I did talk about how we traded Netflix. So Netflix is a stock that I'm in right now. Maybe you came in late, but I went over how I traded it. Again, Bulls on Wall Street members were alerted to this setup. But basically, this thing was beaten down, and I was looking for a good signal, reversal signal, and I just realized that you guys aren't seeing it. So let me share it again. So you should be seeing my screen now. Basically, I was looking for a reversal signal, and we got kind of a piercing pattern here in terms of candle patterns. So it looked like it was going to continue down. Reverse course intraday showed a lot of strength. That was my clue to get in. And then now we're, it's played out like we expected. It showed strength here. It's moved up about 10 points. Now, if you're not in it now, I would wait for a break of 350. I wouldn't enter here because you're not getting the risk reward that I got at this point. But if it breaks 350, then you can put your stop at maybe 2 or 3 points and play for a run up to here, which would be huge. All right, let's take a look here at some of your other questions. Sandra, what do you think about Hertz? I'm currently in at 15, looking to hold. HTZ, nice, I like it. So you played, I don't see many people doing this, but you played a reversal setup on a stock that had been beaten down. So I do like it. Obviously, it's testing the 50-day moving average, and I'm not going to share my screen here, but for those of you guys who can't see it, it was beaten down, reversed, now testing its 50-day moving average. Depending on your time frame, I do think watch where that 200-day moving average is. I would get out before that because that could provide a lot of resistance. Jim, what's going on? How long should you be in a 3 times ETF? Yeah, good question, Jim. So let's talk about leveraged ETFs. So there's an underlying ETF, and then there are leveraged ETFs that track the underlying. So for example, if you're trading SPY, the leveraged ETF would be SPXL. Now, you can trade SPY directly. Let's say SPY was trade. Well, let's look where SPY is right now. SPY is at 283, and I'm going to share my screen again to illustrate this point. SPY was at 283. Now, so it was up 0.43% on Friday. Now, if we pull up SPXL, you can see here a directional SP 3 times. That means it'll have 3 times the leverage, and that played out. SPY was up 0.43%. SPXL was up 1.3%. So about 3 times what SPY was up. The price pattern is going to look very similar. And then if SPY was down like 0.5%, SPXU or SPXL would be down around 1.5%. So it's going to be more volatile, and we like that as swing traders because we can we can trade the volatility. The problem with it is for long-term holds, and that's a great question, Jim, that you're thinking about this, and a lot of people don't think about this, but there's price decay in these leveraged ETFs. And what that means is these prices are reset every day. And when they reset, they lag the underlying a little bit. And then you're going to get this price decay. So over time, you're going to end up losing money on these leveraged ETFs because if over a year, SPY is up 50%, you would think SPXL should be up 150% because it's 3 times. But actually, over time, these small price decays that you don't notice when you're trading short term, they start to show up and it'll start going down like this. So I usually think about the trade, and if I'm going to be holding it for a month or less, I don't worry about it. It's not going to really show up or affect you that much. So for short-term trades, don't even worry about it. But if you're thinking about holding it as a trend swing longer term, I would say if you think you're going to hold it 2 months or more, you probably shouldn't be using the leveraged ETF. All right, great question. All right, TD, Paul Anthony, let's look at TNDM. Really nice breakout. I think it's a little late if you're not in it already, but when it broke 28.75, you had a really good setup, and it's up to 33. And let me share my screen so you guys can see this. Really nice trend setup. You can see where it broke out. You had the break here. That was a good entry. Up to 33 now. I don't think there's much you can do with it at this point. Maybe if it gets more extended, you could actually look to shorting it. Okay, one last question here. Dennis L has a question here. Any suggestions for where I can invest 400K? You know, there's a lot of, I mean, there's a lot of places you can invest, you know, and then stock specifically. Are you trading long-term, swing trading, day trading? You know, what are you doing with that? I would say a good strategy would be to, now that you've got a decent amount to be trading, with that 400K, I would divide it up. So, you know, maybe take 200,000, put it in a 401K, self-direct it, and then get some good long-term positions. You know, the best companies that are trading themes, maybe you can divide it up a little bit between a financial stock, like a PayPal, you know, divide it up between FANG, Facebook, Amazon, Netflix, Google, and Apple. And this isn't advice, but just a potential way you could do it, and a few other areas. And then the remaining portion, if you're proficient at swing trading, you could swing trade it, and that gives you two alternative means. Whereas, you know, if your swing trading is not going well, maybe your long-term positions are, and vice versa. So that's one way you could do it. And if you day trade, you can even take a small portion, maybe 50K, and day trade that. A lot of it depends on what you're good at. If you're not good at this stuff, obviously you've got to do a lot of learning, and then just go with the long-term positions. Okay, Sono, one last questions here. Sono, recent IPO'd Thursday. They build really good speakers, by the way. But you know, for a swing, there's absolutely nothing to do right now. We don't know what it's going to do. As a day trade, and you know, I usually don't talk too much about day trading, but what I would be looking at as a day trade right now is to watch range breaks. So for instance, if it breaks this range here, that would be a good spot to think about entering. If it breaks the high, that would be a good spot to enter. And if it breaks this range in here, that would be a good spot to enter. So look at these, if you day trade, look at these ranges and look for breaks of those ranges. Very simple. As a swing, we need more data. We need more information. So maybe after about a week or two, it starts to consolidate and break one way or the other, then we could consider trading it. All right, guys, great questions. Really great group of traders in here. I do these things about every couple of weeks. And then remember, you can join bullsonwallstreet.com. Let me pull it up here real quick. If you guys want to stick around and want some more information. One, there's a ton of free content. So you don't have to join anything. You don't have to pay for anything. Just go into the blog, and there's a ton of posts from Kanal, from Z-Man. These are more day trading related. And then I have a bunch of posts in here going back like 3 years, all on swing trading. So there's a ton of free information. You'll see a lot of my past trades. I talk about different setups. And then there's the swing report. So go into swing alerts, $99 a month. You can sign up 50% off if you go a year. It's $600 a year. And you get the daily report. You can see here when I go in, you get a video every day, every trading day. There's a video where I go through the market, go through the indexes, go through the stocks I'm watching. And this is a little summary, but you really should be watching the report. That's much more in depth. But you get a summary of the stocks we're watching, the current positions we're in. You can see what I'm in right now: Tesla, Lulu, GRUB, Pets, and Netflix. We talked about a few of these right now. And then you see here's the trade alerts that people get intraday. And you can get those from text, email, or you can just go into the site here. So that's the report. Bootcamp is going on right now, so you can look into that. All right, guys, and I do these every couple of weeks, so be on the lookout. In about 2 weeks, I'll be doing another one, so mid-August here. It might not be on a Sunday. We'll probably do one during the week to make sure people who can't do it on weekends can do it on weekdays. So all right, guys, this was a great session. I'll see you guys here in a couple of weeks.